Hey guys, Jason here for ChartGuys. ChartGuys is an incredible community made up of the best people I've ever met. Some I've met online, some I've met in person, and they're just, it's an amazing community who loves charts and loves technical analysis, who loves trading, and I invite you to be part of it. Check us out. Anyway, we're looking at MGI. MGI was a request on YouTube, and I'm happy to do those. So let's take a look at what we got on MGI. I've never looked at this ticker before, so I'm going to start with the weekly time frame because I want to figure out what's going on, and we will adjust our analysis as we drill down. Right now, it looks like we've got a big swing to the upside. Now we're seeing that counter swing, bulls in full control, bouncing off EMA 26 on the weekly time frame, and now bulls are trying to establish, is this just a little bit of a bounce, or are we going to see some continuation? A couple of things can happen. One, we're going to get a weak little bounce here, and then continue to the downside, or we're going to get into a weekly equilibrium, which is often the case after a big move, and you see this whipsaw back and forth before things start to normalize. And what's happening there is there's a lot of energy expended in one direction, a lot of energy expended in the other direction, and you get into this sort of bouncing sort of pattern till eventually we just resume whatever market we're going to go into. That's what we're looking for on this sort of move, a weekly equilibrium, and we can ride either direction as long as we're confident in the direction that we're going. And on the weekly time frame, so far, I haven't seen a lot that convinces me that this is the bounce. So we need to convince ourselves that we've got an actual bounce that's got some sustainability to it. So on the daily time frame, what are we looking at? Daily time frame so far is just a lower high and rejecting from EMA 26. So this is the first indication that this is going to be a continuation to the downside because we have not been able to get over that level. We're seeing lower highs, lower lows on the daily time frame. So we are still in a very much downtrend on MGI on the daily time frame. And in fact, this is right in the area where we would expect to see a reversal of movement to the downside. And that will be reflected on the hourly and 4-hour chart. So in order for bulls to pull things together and continue into that potential weekly equilibrium, we need to hold a higher low over $3.42, which would have us coming down and doing something like this. And then we go back to the weekly. What does that look like? A little bit of a bounce, some continuation, a higher low established, and then upside potential. That's what we want to see on the daily. Alternatively, we could just blow right through this, and it's unlikely to do it, but we can just blow right through, set a high over 468, and then start setting a higher low. Then you look at this and you say, what are the more likely of those two scenarios? I would argue that we're going to go down, set a higher low, reject from these EMAs, consolidate, because on the daily time frame and the hourly, which is driving this, we're going to be getting into some overbought conditions with high RSIs. So weekly time frame, we're looking at potential equilibrium. We need to see more conclusive evidence on the daily trend to indicate that we're going to see upside potential. We're in a nice bounce so far, but that's all it is thus far, is just a bounce. On the 4-hour time frame, we have the potential here to be setting some higher lows, higher highs. Here's 342. We have another attack by the bears with a low at 374. And if we can pull away to the upside and hold 402 and break over top of 428, that will lock in 402 as a more conclusive 4-hour higher low. Now, these are after hours levels, so be aware of that as we're playing. But so far, we're in a potential for a 4-hour uptrend, and our RSI is happy right at 52. Go to the hourly time frame. How do we look there? Well, we were in an uptrend. We've lost that. 421 is our current high, so we're in a little bit of a 15-minute equilibrium, which is why we are seeing that consolidation reflected right against those daily EMA levels. So this is where things start to turn around for us, and we start to get indicators of what's going to happen next. 421 was a double top high of day today, and 409 is a key level for us to watch. And in fact, we've got even a tighter range here going into the end of the day, sitting at 410. So 421 breaks and 428 gets out of the way. We go to our daily time frame. What happens there? Well, that gets us right over our EMA, and that shows us that upside continuation, and we're just going to keep on marching until that slows down. However, if we lose that 410 level, so let's go back to the 15-minute time frame. If we lose 410, we knock out 409, we're going to be on a bear trend for the day. If we lose 402 support, and that puts us right back on track and toward that eventual goal of what we're looking for, which is that 4-hour higher low, that sustainable level that gets us up and out, and would be a healthier approach to this weekly potential equilibrium. So if you're just looking for a flip, tomorrow watch 421, resistance at 428. Above that, who knows? Sky's the limit. Actually, it's not. It's 460. If we break bear 382, 345. So good trade setting up, nice tightening range. Excuse me, nice tightening range. And those are the levels I'll be watching for the short flip. And then those other levels, the weekly 4-hour high or low, or that less likely, in my opinion, move to the upside against those resistance levels. Anyway, I hope that helps. And if you want to learn more about how we do this and some of the trades that we take in and all of that jazz, chartguys.com.